Welcome back. A big call on Apple this morning as Wedbush Securities is raising its price target on the iPhone maker to $400. That makes it the highest price target on Wall Street. And joining us now, Dan Ives, who is, of course, the analyst behind that call. What's the main reason for this, then? iPhone sales, pure and simple, or multiple expansion? Yeah,
I think near term and long. I mean, near term, we continue to have high conviction in terms of iPhone 11, especially China being what I think is 3 to 5% ahead of expectations. But the longer term call here, and even taking a step back the last 2 years, we believe we're going to a super cycle. And in terms of 5G, especially even from our Asia trip, I feel like 220 million units going out is sort of now the new line in the sand. I think ultimately at this point, you could be above peak 2015 iPhone 6. So that's why for us, from a sum of the parts, as long as numbers continue to go higher and the services business gets re-rated, this is a stock, in our opinion, that has a 4 in front of it.
But it's already re-rated a lot in the last 12 months. So you think there is more room on purely on re-rating as well?
Re-rating meaning multiple expansion.
Yeah,
correct?
I think we're only halfway through the re-rating. And the reason I say that, and it's been a big core of our thesis on the services. Because I think the services business, if you take that, let's call it $60 billion of revenue going 2021, we believe that's worth about $600 billion in terms of that services business, what that value is. You start to put that together with the iPhone franchise, which continues to be the Rock of Gibraltar. That's how we get to what I believe ultimately by the end of next year will be $2 trillion.
Are you in the camp of people that hope that one day the whole company will be valued like a services company because of the way they've changed how they report the iPhone sales and they're trying to argue that it is like a subscription even though you pay for it in a lumpy fashion? Or are you just saying the services business itself grows and that helps the sum of the parts multiple?
It's more the former, because our view, and it's really been a big part of our thesis here, even go back a year ago, when you look at, obviously many calling Fire in a Crowd theater stock at 150, 160, our view was always the install base is the golden jewel of Cupertino. 925 million iPhones worldwide. We think right now from monetization, that's only 8 to 10% penetrated from a services perspective. You start to kind of look at some of those penetration rates on services. That's why, in our view, the monetization of the install base is just starting to happen here. Next few years, I think we start to get into the sweet spot.
So the multiple will go from what to what? I've been hearing this for more than a decade, that finally.
Yeah, so if you look historically, Apple, 12 to 16 times where it traded. The whole view right now, which is our view, is that you're going to start to get to low to mid 20 multiple from an EPS perspective. But you really have to view it as a sum of the parts. What's the iPhone core franchise worth? What's the services business? Which is why, in our opinion, this is going to re-rate to what we believe is a $400 stock by year end, just because of the dynamics of the 5G supercycle and the services.
Reflecting a combined multiple above 20.
But
it's there, and I'm not disagreeing with you. It's there already. We had a conversation on halftime a couple of weeks ago where you asked me if it was warranted to view Apple in the same fashion as Procter & Gamble.
Some people,
which Jim Cramer has been talking about for a long time.
As a staple.
I said, ludicrous. I'm wrong. This is now being rated as a consumer stock. It's the same as a McDonald's at 27 times or Coca-Cola at 27 times. So to Michelle's point, we've seen multiple expansion double over the last 12 months. You're now at that point where it is being valued as a consumer stock. The rest of your analyst community, they disagree with you. They have the price target 6% below where it is today. You've got 27 buys, 14 holds, and 7 sells. So why are they wrong, and why can this experience further multiple expansion?
Yeah, I think that's why it's such an emotional bull-bear story right now in terms of Apple, where it should trade. I think ultimately where I think some of the cynics are wrong, in my opinion, is underestimating the services penetration and where that's going to go, combined with what's happened on the install base. Because it comes down to, you're going to sell 400 million iPhones in the next 2 years. That's really going to put a renaissance of growth in iPhone, but on the services piece, in my opinion, that's something that's a mid-teen grower next few years.
But I just would remind people of when you've had iPhone upgrade cycles that have disappointed. 9 to 10 was much worse than 10 to 11. And maybe for the next 12 months they're protected because the 5G super cycle is going to really help them and make sure everyone upgrades. But without significant innovation, you have one cycle that misses estimates, and that bracket of putting the whole business on a P&G multiple, the whole business on a services multiple, could easily go away. And you've had a huge run, of course, over the last 12 months already.
That's fair. As an Apple shareholder, I would push back on that and just say they seem to have the ability to introduce new products, and they've done that in the wearables with the AirPods. AirPods potentially can be the third biggest revenue-generating business for Apple over the next 18 months.
5%. If you look, I mean, it's a great point. AirPods, 5% of revenues next year. I mean, we think they sell 85, 90 million units. That's a good example of the innovation underneath the covers right now. That's starting to be part of the...
Could still be offset by multiple contraction on the iPhone portion, if that were to happen. The other quick point I have, Dan, is what do you think about buybacks? I mean, the share price, they've got plenty of cash to do buybacks, but is the share price high enough that doesn't make sense to them? And if they were to slow that down, does it hurt the share price?
Yeah, and that would be the other bear argument,
yeah.
Just in terms of ultimately EPS, in terms of what's been happening there. I think buybacks continue, but I do believe that finally they're going to start to have to look at more M&A, not just on the core iPhone side, but on the content side. But I do believe right now, if you look at the cash-neutral strategy that Cook's laid out, buybacks are going to continue. And that's why right here, going into next week, I continue to view this as just another step toward putting fuel in the bull thesis.
You're not worried at all about expectations being over the moon at this point, given the stock's move? I mean, they better deliver next week, and not just deliver. I mean, like, really deliver.
Yeah, I think $1 billion beat is what we see going into the print. But more importantly, in terms of March and June, and you look at the pipeline in terms of what we see with 5G, I actually think this is one that the streets continue to really underestimate just what this 5G super cycle is going to look like, which is why we continue to be bullish on it in terms of this sort of multi-year thesis.
One thing that could help a P&G multiple is a big sticky dividend rather than just buybacks. But